Hello and welcome to our web chat on CapellaFX demonstration. This is going to be introduced by Sandra Koch, who is Director of Client Services at Hedge Trackers today, who's going to demonstrate and discuss Hedge Trackers' integrated software solution for currency risk management. Hi, Sandra.
Hi, Jack. Thank you very much for having me today.
Before we start, can you describe the typical currency hedge program timeline? Because I think that puts everything into context, doesn't it?
Yes, I definitely think it puts it into context. And in order for us to establish a baseline and for people to understand the source of risk and therefore the challenges that risk faces, let's just start by looking at this timeline. So if we start in the first bubble, we're talking about any time period between which the transaction is anticipated to occur, but before it actually is recorded in the company's financial statements. And then from time period 2 to time period 3, the transaction is already listed on the company's balance sheet, and therefore it gets remeasured with gains and losses going directly to income. So companies really desire to understand their risk profile from when exposure starts in one, where that might be the plan or the budgeting or forecasting cycle, to when the transaction is actually settled. And anywhere along this timeline, companies can actually hedge their risk and sometimes do and desire to do that. And then the accounting treatment for those derivatives is also an important component. So what we're going to talk about is this risk and the challenges that it's facing in terms of collecting the data in order to make hedge decisions and then to ultimately account for those derivatives.
This is really important. It's also very complex. So can we look at the steps involved in doing the whole process?
I think for most treasury professionals, this process and workflow is going to look really familiar. Exposures must first be collected and aggregated. Hedge decisions get made and derivatives are then executed. And then hedge accounting compliance is applied. Derivative accounting is processed. You have to disclose this information. You'll also ultimately want to report on this information. And then the cycle repeats. And I can tell you that in my experience, colorful words come to mind during this process. It's really tedious, but things like overwhelming, frustrating, time-consuming, error-prone all describe this tedious process. And not only that, but Treasury isn't really the source of a lot of this data or responsible for the underlying transactional activity that drive exposures. Treasury professionals are risk managers. They want to execute the trades. And then they ultimately have to have an understanding of the accounting requirements in order to create the compliant documentation. And so this is a cycle that's really tedious, but CapellaFX is going to help you manage this process now from end to end.
Is there any particular part of this is more complex, bigger hurdle than others?
You know, not really. I mean, what's really complex is really the collection and the decisioning process. And what CapellaFX is going to do is eliminate a lot of those inefficiencies of working with fragmented systems, disparate teams, and daunting spreadsheets that individually manage only certain aspects of the process. But I would say that the data collection and the decision on how much to hedge or how much to incrementally make a hedge change is probably the most difficult step in the process.
So let's have a look at two aspects of this process.
Yeah, let's start with the pre-trade workflow. Exposure data capture and management, whether it's an anticipated transaction or already recognized transactional data, is the most time-consuming and frustrating part. But we're going to show you today in the system how we're going to be able to allow you to collect this information in standard templates and make this process really easy and efficient.
Okay, so shall we look at the second aspect?
Yes, so from post-trade execution through sort of compliance and reporting, CapellaFX will directly interface with your trading portals where you can get pricing and execution. You're going to, after you trade, the hedge relationship is going to establish compliant documentation. And we do it both under US GAAP or IFRS, so we're both compliant in those two standards. And the system is going to supply you with disclosure tables and then analytical results. And honestly, this end-to-end process from data collection through compliance and then communicating back either to your general ledger systems or for annual report or your disclosures and SEC information, this is really revolutionary. It's revolutionary for Treasury because nowhere else are you going to be able to collect, comply, and communicate from a single system.
And that's the three things, isn't it? It's collect, comply, and report. It's yes.
Correct.
Okay. Now let's have a look at the demo.
So what you're seeing right now is the CapellaFX landing page. CapellaFX has been on the market for over 15 years, but recently we've added functionality to fully complete the end-to-end FX risk management workflow process. I also want to mention that Capella is a fully SaaS-based platform. All you need is an internet connection, a user ID and password to access the application, and therefore there's really no need for IT resources required to install or manage any ongoing updates within the system. The FX workflow starts in the exposure feature. The exposure collection process is driven by cycles, and the cycles are managed by the Treasury team. And in the cycles really drive and define the timeline, including the collection start date and the collection end date. And there are two types of cycles that customers would run within the system. The first cycle would be a cash flow, which is the forecasted transaction cycle, or a balance sheet cycle. The balance sheet cycle is going to be for already recognized transactions. For today's demo, we're going to focus on the cash flow forecasting cycle. But before we do that, I just want to mention that within the balance sheet cycle, the process is the same. However, the account structure, which is going to be your balance sheet accounts like accounts cash, accounts receivable, accounts payable, are all positions within a specific point in time. And so we're only collecting one set of data. But what you're seeing here is what is considered a cash flow cycle template. The template is designed by the users. So you as a user will get to define both the inflows and outflow account structure names. So what is the data that you want to collect? This is typically going to be your P&L activity, so revenues and expenses. And then the time frame for which you're going to collect all the future forecasted transaction information. So what tenors or periods of time of the data are you going to collect? This is a really important feature within the system. Your templates are standardized, it's by entity, and it's also by each active currency that you have exposure, transactional exposure in. So this is the information that's going to drive any of those decisions. The people who are going to actually input this information is typically going to be your local subsidiaries, maybe your FP&A team, but anybody outside of the US, and it's usually by entity. And this is important because without Capella, it's difficult to manage this process. By standardizing the templates and data collection timing, CapellaFX offers a single repository for all gross exposure data and streamlines the collection process. So typically companies are now collecting this data in spreadsheets or a proprietary homegrown system, maybe an Access database. But more often than not, Treasury professionals are having to consolidate tens or hundreds of spreadsheets, and there's a risk of the local entity changing the format or the information or the timing. And so it's a really tedious manual process. But now Treasury has the ability to standardize it and then deal with the information consolidation and aggregation of all of this information across all of the entities.
And the entities will have entered this locally.
Correct. And it's a
Okay.
good way to see how things are changing. So the system also allows the users to arbitrate. So for instance, if Treasury had a question about an exposure or an amount, then they can arbitrate. And the way they arbitrate is through built-in email technology that allows the users to communicate out to the field. And then Treasury can approve the information. And once the information is approved by Treasury, then Treasury can then consolidate the information and make hedge decisions. And the way that the system works with respect to hedge decisions, it's a really spectacular process. The system actually uses information to make decisions. But what you're seeing here is the forecast that was just input against a previous forecast cycle that may have been done in the recent past. So Treasury can come in here and quickly and easily look at the forecast comparison. What is the forecast today versus what was it last month or last quarter, or even against your budget or plan? So this is an easy and simple way for Treasury to look at the cycle comparison. And then once they get comfortable, maybe they need to arbitrate again. Maybe they need to ask more questions about the information. They have the ability to do that. Once they're done reviewing this information, then they're going to move on to the decision process. The decision process is really driven by parameters that are assigned to each of these cycles. So what you're seeing here is the suggested trade process. And the companies, what happens here is it's going to look at the detailed information. It's going to take the company's hedging policy. Let's say that the company wants to be hedged 80% in the near term, but they want to be 40% hedged in out terms. So they're going to be able to apply their policy targets. They're also going to be able to apply hedging thresholds, which means do they want to round to the nearest 100 or 1,000 in terms of rounding the exposure, or maybe they only want to hedge or make an incremental hedge decision based on a minimum notional threshold. Last but not least, the system will apply any existing outstanding trades against these exposures, and the system will suggest a new trade. And in the trade suggestion, this is what closes the loop on the collection process, the collection and hedge decision process.
That's key. This is the first big step, isn't it?
It really is. Once you've done your comparison, you're comfortable with your data, this is the really important piece of the process where the system will take the intelligence of the company's policy and thresholds, deal with outstanding trades, and make the suggested trade recommendation automatically based on that information. This is the revolutionary part. This is extremely important, and the difficult process that Treasury deals with, because remember, they may be dealing with spreadsheets on the exposure data. They have to actually go out probably from another database or another spreadsheet to figure out what trades are outstanding. They have to know how to apply their hedging targets and thresholds across the time horizon, which is always shifting as you move through time. And our system allows you to do that all in one.
And then you make the actual trade through the portal.
Yeah, at this time, once the suggested trade has been made, you're teed up for portal or manual execution. So when you trade electronically, trades can be pushed to the respective online platform for pricing and execution, and then automatically retrieved back into our system for hedge accounting purposes, which applies the strategy to an actual executed trade. And so when you actually connect an exposure to an executed trade, you create a hedge relationship. And the hedge relationship is attached to a strategy, and the strategy will drive your compliance for hedge accounting purposes. So what you're seeing here is a trade ticket, and a trade ticket is going to put those two pieces together, the executed trade against the exposure with the compliance criteria. In this particular case, you're looking at a US GAAP trade ticket, but we also, remember, have IFRS compliant reporting as well.
And this is basically it.
Well, the next step in the process is that executed trades need to be accounted for. So Capella allows you to actually create journal entries and disclosure table information, and that happens within the period close process. And within CapellaFX, the period close is a step-through process. It's very simple and easy for anyone. They don't have to be hedge accounting experts to step through the process, but at the end of this process, journal entries are created, and they're created by entity and in the entity's functional currency. So what you're seeing here is a sample summary output of a journal entry. But the system also has a built-in report writer, and we have various different standard reports. So any way that you need to consume the data, maybe you need a flat file because you want to import it into your ERP system, or maybe you like this version and you're going to send this out to each of your local legal entities to post to their general ledger. Any way you need to consume the data, the system has the flexibility to allow you to extract it. And then don't forget that the company total results are consolidated. They're consolidated into the entities or the company's reporting currency and is used for disclosure reporting. And this is an example of a balance sheet or a position report. But there's also performance reports for P&L activity. There's OCI detail and roll forward information. So anything that you're going to need to meet the requirements of your respective accounting is going to be available in the system. And so once you've created journal entries and probably quarterly dealt with your disclosure information, then that cycle of communication really closes.
And this applies to more than just American standards. It all can also do IFRS and so on.
Correct. So ultimately, this has been a very high-level overview of CapellaFX's end-to-end risk management workflow. And hopefully you've seen how simple and easy it is to navigate the system, to process the task, and see the outputs. And it's all been easy to digest and understand, and it's all been within one system.
So what are your key takeaways from this presentation and this demo?
Well, I'm hoping that what really resonated is that we have a collection, a compliance, and a communication of application within CapellaFX. So all of your FX exposure and derivative data will be in one place, so you can do more easily. And your workflows can be SOX compliant because all the features and functionality are going to be available within one single application. And the system applies and uses the company's hedging targets and thresholds, as well as existing trades to determine hedge decisions, while creating hedge compliant documentation for those trades. And then we feel like we have the most flexible system to apply the most complex nuances of applying hedge accounting, and it's the easiest system to output actual accounting journal entries and compliant disclosure tables. And last but not least, I do not want to forget that above all of this, our system is backed by Hedge Trackers' legendary support. We have the most knowledgeable experts in FX risk management anywhere in the world.
Thank you, but what is the single most important feature of CapellaFX, in your opinion?
I think the single most important feature is the fact that from the ability to decide on what the hedge decision is and its tie-in to the compliant documentation and requirements for hedge accounting, to me, that connection is the most valuable piece because it absolutely is the most troublesome part of the process for Treasury. It is the most error prone and it is the most time consuming. So if we can deal with those in a very succinct and efficient process, I feel like companies are going to gain a lot of valuable time and the ability to analyze data versus deal with the data collection and decision.
Wow, thank you.